To some investors, dividend investing can sound a little too predictable, which may or may not convince them to think that it's anything but interesting, but that's hardly the case. Because to an experienced investor, dividend investing is like the ultimate game changer. Although yes, we can't deny that dividend investing on the surface level can be a bit dull if not completely boring. There's definitely a sense of it lacking something. Perhaps it's because of the way that it works, which according to many gives you a little room for growth as an investor. Contrary to that, however, if you think about it, there's actually a great deal of opportunity for an investor to have when investing in dividends. There's a power that dividend investing holds which can have a great impact on your return. It's more than just having a steady source of income through stocks. In fact, when investing in dividend growth stocks, you're going to find profits increase insanely. How and why? Let's find out in today's video. Hey, welcome to Stock Market Mate. Today we'll talk about dividend investing, how dividend growth impacts your investment journey. Before we get into it, subscribe to the channel and hit that notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. Understanding dividend stocks. It's essential to understand completely how dividend investing works in order to turn things in your favor. This will give you insight on how greatly dividends can increase your return, which can help you work to make the best out of it. So first things first, what is a dividend? A company, after earning a ton of profit, can decide to pay its investors money, especially if they can no longer come up with ways to expand their operations and keep their profits increasing. As a result, they issue dividends to their shareholders and distribute these dividends to them according to the number of shares they own. Typically, dividends are paid quarterly, semi-annually, or annually after the company announces its profits. Companies that pay dividends generally increase their dividends yearly. In fact, a number of companies have increased dividend payouts continuously for more than 25 years. Dividends have an enormous impact on stock market profits, but many investors fail to realize this. Additionally, from the year 1980 to 2019, 75% of the S&P 500 returns reportedly came from dividends. In other words, dividend payments contributed a significant portion to the overall returns that stock investors have realized on their investments compared to what they would have earned without dividends. Furthermore, combining a dividend with a rising stock price can offer a compelling earnings potential. It's not so much a high dividend yield that means dividend power, but a high company quality that you can determine by studying its dividend throughout the years, which should gradually increase. You can find such companies valuable if you're a long-term investor. Moreover, by looking at the dividend payout ratio, or the portion of earnings allocated to dividend payments, we can see how dividend profitability combines with company growth. Keeping the dividend payout ratio constant, say at 4%, while the company grows, that 4% represents an ever-increasing amount. So how and when is a dividend issued, you might ask? Well, there are more than one things you need to remember regarding that. First, dividends are decided by the board of directors, both in terms of amount and timing. So basically, they get to decide whether or not the company will pay dividends in the first place. The next thing is, for companies that are publicly traded, dividends are typically paid on a quarterly or annual basis. Typically, dividends are declared by companies with an established track record of generating income. Also, as mentioned before, companies pay dividends when they're unable to reinvest their cash at a higher rate than shareholders. The snowball effect. To understand what we mean by all this, let's take a look at the strategy called the snowball effect. In this case, a snowball effect represents compounding. Compounding is the snowball effect created when your earnings compound on your original investments. The impact of compounding snowballs over time. What's more is the earlier you start on this, the better the results will be. The snowball effect shows how small acts executed over time can produce big results. It's called a snowball effect because it is similar to when a snowball rolls downhill, gaining speed as it accumulates more snow. Therefore, whether it's snow or profit gain, the effect brings momentum. Furthermore, dividend growth stocks can provide large amounts of dividend income over the long term. It is important to understand how compounding works before we talk about how to apply the snowball effect. To put it simply, let's imagine you invested $1 every day at 1% compound interest. Within 5 years, your $1 would be over $77 million. Although it takes longer to compound wealth in real life, the principle of compounding is still quite powerful. To qualify as a Dividend Aristocrat, a stock may have paid dividends continuously for 25 plus years and be a part of the S&P 500 index. By the way, if you haven't heard of Dividend Aristocrats, there are companies in the S&P 500 index which constantly increase dividends to shareholders while paying a dividend every year. The power of dividend investing. It is no secret that compound interest works wonders for investors, and dividends work in a similar way, especially for dividends reinvested back into a company. The advantages of dividend investing include increasing dividends as time goes on. It's also impossible for a company to fake dividends. They either declare a dividend or they don't. Dividends generate cash flow for investors, which in turn creates intrinsic value. Moreover, dividends protect investors from inflation. And finally, dividends can help mitigate volatility. This is because dividend yield increases as a stock price falls, making the stock more appealing. With such benefits, it's not going to be hard to turn your investments into something great. Although it's not without risk, its power ultimately weighs more than we think. Its potential is indeed insane. There's so much room for growth, contrary to how some investors perceive dividend investing. Just imagine how much you'll earn if you start early. Your profits will basically skyrocket, leaving you with pretty much a lot of wealth by the time you retire. However, it's important to remember that it will have risks as well, and so you still need to be cautious when investing. However, you don't have to fear that much because it's bearable, and once you get the hang of it, it'll be easier for you to avoid those risks altogether. It'll be a bumpy ride, but it'll be worth it. One of the drawbacks of dividend investing is the income taxes. Yes, you do indeed need to pay taxes on dividends. Specifically, you must pay income taxes on dividends received, as well as the reinvested income you received from non-retirement sources. What we can suggest for you to do is to consult with your favorite tax professional or tax preparation software for more information on how much taxes you will owe. A dividend is an important way for companies to compensate shareholders, and dividend stocks can prove to be powerful investments in an investor's portfolio when used correctly. While dividend reinvestment may not be right for all investors, it may be a good option for those who want to grow their wealth passively. Keep the snowball effect in mind when you choose your investments. Dividend snowballs can be used to pay your bills and replace your regular income in the future if you're patient enough. Or it can also be used to generate money for your savings account, whatever it is that you need. So all in all, although dividends are not everyone's favorite investment strategy, in the long run, investing in these boring companies can yield surprisingly high returns. You just need to be patient as well as wise in your decisions when it comes to these things. Consult a professional or do your own research before you proceed to invest in particular stocks. Ultimately, experience will also help you do things better and help you learn all the things you need to know and remember. It will also help you create a strategy of your own which suits your investment goals. What we've discussed so far are essentially just to give you more perspective on dividend growth stocks in terms of its strengths and potential. That's about it for today. If you found this video helpful, kindly hit the like button. For more information on dividends and dividend investing, consider subscribing to our channel and hit the notification bell to get updates whenever we post new videos. Also, you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!